All right, in India's newest IPOs are defying a broader market sell-off. The 23 stocks that debuted in 2025 have gained an average of 15% from their offer prices, while the Nifty 50 index has dropped over 2% this year. Now, this comes as last year's strong rally in Indian equities has faltered, with the Nifty 50 posting its worst monthly losing streak since 2001. So, despite concerns over slowing economic and earnings growth, demand for new equity offerings remains strong. The Securities and Exchange Board of India is currently reviewing more than 60 IPO applications, signaling continued momentum in the market. Equity markets may be under pressure, but India's IPO pipeline remains strong. According to the JM Financial, initial share sales in 2025 could raise between $25 billion and $30 billion, surpassing last year's record $21 billion. Domestic mutual funds are playing a key role in sustaining demand, with inflows of nearly $3 billion per month from retail investors. While the IPO markets remain resilient, some of last year's biggest listings have struggled. Swiggy's 53% surge post-listing has nearly faded, and Hyundai Motor India's shares are yet to trade above their IPO price. Most IPOs in 2025 have been small, with all but one raising under $100 million. However, larger listings are on the horizon. South Korea's LG Electronics plans to list its Indian unit, targeting over $1 billion, with HDB Financial Services, which is a subsidiary of India's largest private lender, preparing for an IPO of up to $1.5 billion. Analysts say the IPO boom will continue as long as investor appetite remains strong. All eyes are now on the market-related announcements in the upcoming budget. All right, for more on this, we're now being joined by Mr. Ajay Bagga, market expert live from Mumbai. Thank you so much for joining us on World Business Watch.
Thank you very much.
Sir, what major factors are driving India's IPO boom?
Yeah, one is increased domestic investor participation in the equity markets. Second is the outperformance of the IPO market. So people have been getting good listing gains. Of course, there are a few lemons that come around all the time, but mostly people have been making good listing gains. Third, we have seen that even foreign portfolio investors, while they are selling in the secondary markets, they have been buyers in the primary markets via IPOs. Fourth, there is good supply of paper. In fact, as you were mentioning in the segment, we had Hyundai earlier and now LG coming in. So even multinationals are listing their Indian subsidiaries in India, because there are these cases where we used to have Domino's earlier, Jubilant Food, which had a higher market cap than the US parent itself. Same way with Maruti Suzuki versus Suzuki. So foreign investors have also seen that Indian markets provide good, high valuations in a booming consumer economy. So these are all the factors which are leading to IPOs finding favor.
And just to expand on that, Mr. Bagga, what do you reckon are the challenges that India's IPO market faces in the long term?
Yeah, long term, not much challenge because the market is expanding. But in the short term, I think there is a lot of froth. IPO markets also go through a cycle. So in a cycle, it starts with where a lot of money is left for investors on the table. Then slowly, merchant bankers and promoters get greedy. And we see that listing gains start to evaporate. And finally, there's a big crash that comes in. So we are probably in the second part of the IPO cycle where valuations are quite stretched. So going ahead, listing gains might become problematic, but that could take a year or 2 years still. So we are still mid-cycle, but on a long-term basis, I think this market will deepen as the economy goes to $10 trillion. The market cap will also go to $10 trillion, and a lot of companies will be able to list. So long-term, we don't foresee much problem.
Right, Mr. Bagga, just coming back to a point that we touched on earlier, given the volatility in the global markets, how can India's IPO market stay attractive to foreign institutional investors, and how can the upcoming union budget address this?
Yeah, we have to look at the taxation, because the long-term tax on foreign institutional investors also is hurtful. And we have seen some amount of sentiment breaking. Secondly, our regulators are strong, but merchant bankers have to be more responsible and ensure that the valuation is not high. Third, end-use monitoring of the IPO proceeds is very critical because we should not spoil the sentiment, and foreign investors should be able to recover their money and make good returns. That must be offered through strong regulation and self-regulation by merchant bankers. Promoters will, of course, try to get the maximum amount they can for their offerings. But I think vigilant merchant bankers and regulators have to ensure that foreign investors are not sold bad stories or narrative stocks, which then tank post-listing.
All right, Mr. Bhagat, thank you so much for joining us on World Business Watch with your insights on this. It's always a pleasure to have you on the show with us.
Thank you for calling me.